You close your laptop, promising yourself that was the final trade of the night. Yet 5 minutes later, your fingers hover over the keyboard, craving one more chance at the market. That single phrase, just one more trade, has destroyed more trading accounts than any bad economic news or unexpected market crash ever could in the history of global finance. Trading activates the exact same neural pathways in your brain as a slot machine in a casino. Every green candle triggers a rush of pure dopamine, demanding immediate repetition. When you win, you want to double your fortune before the bell rings. When you lose, you feel an urgent, burning necessity to win your hard-earned money right back. The market does not care about your feelings, your rent payment, or your desperate need for validation. It is an indifferent machine that rewards discipline and mercilessly punishes emotional impulsivity. It always begins innocently enough with a well-researched plan, strict risk parameters, and a calm mindset. You enter the trading day feeling completely prepared for any market outcome. Your first trade hits its profit target within minutes. A surge of confidence floods your system, making you feel invincible, as if you have completely cracked the code of Wall Street. Instead of walking away with your hard-earned gains as originally planned, your brain whispers that you should capitalize on this momentum because the market is clearly in your favor. You enter a second position without the same rigorous analysis. The stock stalls, reverses direction, and begins eating into the profits you generated just moments earlier during the morning session. Instead of accepting the small setback and closing the trade, you tell yourself the market is just testing support and will bounce right back up before the closing bell rings today. The bounce never comes. The position slips further into the red, turning a minor tactical error into a painful financial loss that completely wipes out your initial morning gains. A cold wave of panic washes over your chest. Your heart rate accelerates instantly. The calm, calculated professional vanishes, replaced by a desperate speculator seeking immediate financial redemption. This is the exact psychological trap known as revenge trading. You are no longer trading charts or economic data. You are fighting a personal war against the stock market itself. To recover the lost funds quickly, you double your usual position size, throwing all caution and risk management out the window in a reckless bid to win back your money. For a brief fleeting moment, the trade moves into positive territory. You feel a surge of vindication, believing your aggressive gamble was the correct strategic decision all along. Then, without warning, breaking news flashes across the terminal. The market slams downward with brutal force, crushing your oversized position before you can even react to the sudden drop. The loss is now 3 times larger than your original morning profit. Panic gives way to numbness as you realize the gravity of the financial hole you just dug yourself into. Yet, deep inside your mind, the voice whispers its most dangerous lie yet. Just one more trade can fix this entire mess and make you whole again before midnight. You convince yourself that statistical probability owes you a win now. You ignore every rule of trading psychology you ever studied, driven entirely by the need for immediate recovery. You place the trade with maximum leverage. Every dollar you have deposited into this brokerage account is now hanging in the balance on a single, emotionally driven market gamble. Seconds feel like hours as you watch the price ticks bounce back and forth across the screen. Your breath is shallow, your muscles tense, waiting for the inevitable verdict. The market breaks hard against your position. An automatic liquidation warning flashes across the display. Your entire account balance is wiped out in a matter of devastating seconds. Silence fills the room. The glowing monitors continue their impassive dance of numbers, but the capital is gone, and the illusion of easy wealth has shattered into dust. What just happened to you is not merely bad luck. It is a textbook psychological trap engineered by your own brain chemistry when exposed to high-stakes financial risk. Behavioral psychologists discovered decades ago that variable intermittent rewards create the strongest psychological addiction known to science. The stock market is the ultimate variable reward machine. You keep playing because your brain remembers the effortless win from your very first trade, constantly chasing that exact same chemical high, regardless of the mounting losses. Patience is the scarcest asset in modern finance. While professional traders wait days for high-probability setups, amateur retail traders demand constant action every single minute. Boredom is often more dangerous to your portfolio than a bear market. When nothing is happening, the urge to create artificial excitement by entering a random trade becomes overwhelming. You throw good money after bad because admitting defeat feels like a personal failure. You stay in losing trades, hoping the market will eventually prove your initial thesis correct. When the trade goes south, it is easy to blame market manipulators, algorithmic high-frequency traders, or bad luck, instead of confronting your own lack of emotional discipline. Every successful trader has faced this exact precipice. The difference between those who build lasting wealth and those who burn out is the ability to walk away immediately. To conquer the trap of just one more trade, you must first learn to recognize your personal emotional triggers before they hijack your decision-making process entirely. Professional funds enforce strict maximum loss limits per day. Once the limit is breached, the trading platform locks them out automatically. You need to adopt this exact rule. When anger or frustration flares up after a losing trade, physical movement is your best antidote. Step away from the screen, take a walk outside, and reset your nervous system. True trading success is not measured by how many trades you take in a day, but by your ability to stay on the sidelines when market conditions do not fit your edge. Every trade is simply an independent probability event. A string of losses does not mean the market owes you a win. It simply means the current market environment is hostile. Keep a brutally honest trading journal. Document not just your entry and exit prices, but your exact emotional state during every single trade you execute throughout the week. Reviewing your journal after a month will reveal harsh truths. You will see clearly how nearly all your catastrophic losses happened during those unauthorized revenge trades late in the day. Discipline is not something you are simply born with. It is a mental muscle built through consistent repetition and painful lessons learned from past mistakes in the market arena. The most profitable word in a trader's vocabulary is a firm, unwavering no. Turning down marginal setups preserves your capital for the high-conviction trades that actually matter. No financial gain is ever worth sacrificing your mental health, your sleep quality, or your relationships with the people who care about you outside of the trading world. Treat trading like a professional business rather than an entertainment pastime. Businesses have operating hours, strict budgets, and clear boundaries that are never casually crossed. Learn to find peace in an empty chart. Staring at flat price action without executing a trade is a sign of immense self-control and professional maturity in the markets. Fear of missing out drives amateur traders into poorly timed entries. Remember that the market is an infinite train. Another one will arrive tomorrow morning without fail. Entering a trade is easy. Knowing when to exit and stay out is where true mastery lies. Your ability to lock in profits separates you from the eternal speculators. Create a definitive closing ritual at the end of every trading session. Shut down the software, clear your desk, and transition your mind entirely away from financial markets. You will never catch every profitable move in the market, and you will inevitably take losses. Accepting imperfection is the cornerstone of sustainable long-term profitability. Just as undisciplined losses compound quickly into account destruction, disciplined risk management compounds steadily over time to build genuine, lasting financial freedom. Every time you successfully resist the urge to take just one more trade, you strengthen your psychological resilience and build a stronger foundation for your future. Stop viewing yourself as a gambler hoping for a lucky break. Step into the identity of a risk manager whose primary job is defending capital against irrational impulses. Your trading edge is fragile. It is easily destroyed by emotional overtrading, fatigue, and the delusional belief that you can outsmart unfavorable market odds late in the day. Turn off financial television channels, close social media chat rooms, and ignore the noise of hyperactive day traders boasting about their exaggerated daily gains online. Shift your complete focus away from monetary profits and losses entirely. Instead, grade yourself exclusively on how perfectly you executed your trading plan each session. There is incredible freedom in walking away from your trading desk with a modest profit or a small controlled loss, knowing you beat the psychological trap for another day. Honor your pre-established trading rules as if your financial survival depends on them, because in the ruthless arena of the stock market, it literally does. Conquering the stock market is ultimately not about mastering complex financial equations or advanced charting indicators. It is entirely about mastering your own internal emotions. When you finally break the destructive cycle of revenge trading and impulsive final bets, you unlock a new level of consistency, confidence, and peace of mind. The greatest victory a trader can ever achieve is not catching the biggest market move of the year, but successfully conquering the temptation of just one more trade. True mastery in the stock market is not about knowing when to enter a position, but having the absolute discipline to walk away when the trading day is finally done. Protect your capital, guard your mindset, and remember that tomorrow the market will open again, offering fresh opportunities without the emotional weight of today's unfinished battles. If you found value in this breakdown of trading psychology, hit subscribe, leave a comment below about your own trading experiences, and share this video with fellow traders.